right, what's up everyone? You know, I forgot the wind guard today, so I think the audio is going to be a little bit wacky. So I guess we'll just do the quick audio and visual check. Just keep in mind, I don't know if I forgot it or I don't know if I lost it or what. I'm going to have to go to B&H maybe a little bit later in the week and get it. But anyway, we are back. It's nice to see all of you. It's a beautiful day in Manhattan. And it's been a while. I think we've been gone almost about a month, right? I think give or take a month. You know, a few of my good friends were texting me a pretty funny joke. They say, you know, when you stop streaming, we sell the market, and when you start back up, it's a signal to buy. So I thought I would just go away for the bear market and come back for the new bull. Anyway, lots to talk about. We'll jump into it here in a minute. It's kind of going to be a chill stream tonight. It may only be on for about an hour. We'll see. But we'll give it a minute here on the corner of 57th Street and 5th Avenue, and we'll get started. So if the audio is working and the visual is working, just go ahead and leave a thumbs up in the chat and we will get started. But it's good to see everybody. Thanks so much for joining. Maybe we'll start by going to Central Park first. You see Sally, Derek, what's going on? Peter is here. Thanks for joining. Alan, all of our moderators. It's good to see everybody. Nicholas. What's going on? Victor C., welcome. Well, good evening, everybody. And welcome back to Walks in Wall Street. I believe today is the last day of May 2025, or the last day of April, 2025. Tomorrow is the first day of May, I believe, I think. We've been a little bit out of pocket for the last month, and hopefully we will be able to be back on our normal schedule. So hopefully we will be doing these live broadcasts nightly, starting at 8:45. Now, obviously, a lot has transpired since we've been gone. For those of you who want to stay updated on the market, what if we're not live for any reason, please go ahead and follow us on the X platform. I'm active there pretty much every day, posting my market analysis and my market thoughts. And it's been a massive point in the market for volatility. Now we're going to cover that all in tonight's stream. I think just to sum it up in maybe a few words, I think you saw the low about a week ago. I think that was the low. We always talk about the VIX, we always talk about volatility, and we saw a very, very aggressive, really parabolic blow off in the VIX, or the CBOE volatility index, coupled with the put to call ratio going wild and some of the largest volume that we've seen, almost eclipsing the volume that we saw during the COVID sell-off. And if you were following us on X, it was the night where, you know, you had Bill Ackman freaking out. We were almost limit down on futures, and it was probably some of the most negative and bearish sentiment I've ever traded through in my life. And I made a post, and jokingly but not jokingly, and I retweeted Mr. Ackman's kind of freak out there on X, and I said, this has to be the bottom. And we'll see, but it looks like the market put in a bottom on that day. Now, we had 2 rally attempts, and we have now 2 follow-through days. Now, as you know, on each follow-through day, it's important to add exposure. And what we look for is, or at least what I look for, in terms of criteria, are stocks that were bucking the trend during the bear market or during the bear move, right? So as a lot of stocks were getting creamed, down 60+%, there were a few notable stocks that were actually bucking the trend, trading at 52-week highs and into new record highs. A few of those names include Netflix, Palantir, and a select few others such as Spotify, ticker symbol SPOT. So it is very, very telling, and we'll dive a little bit deeper into this tonight. We've been gone so long, I don't want to throw a bunch of information at you, but these market downturns and corrections create the opportunity to really compound out our wealth over time. Same thing that happened in 2022, right? We were streaming and covering it live through the brutal bear market of 2022, which was probably the worst bear market for growth stocks that I've ever traded through in my life. And on the tail end of that, into 2023, into 2024, created one of the strongest bull markets that I've ever seen. And I think that's exactly what we're gonna get here. So we'll talk about reaction to earnings. I think that's gonna be the big thing this earnings season. It's not just the earnings themselves, it's the reaction to earnings coming out of a bear market. And so far, okay, talking about Tesla exclusively, piss poor, horrible earnings, right? Egregious, absolute train wreck of an earnings report, but the stock was up, okay? And it has a lot of analysts on Wall Street and a lot of people kind of scratching their heads saying, we're in a brutal bear market, the indices are off, 15+%. Tesla reports earnings that are absolutely, egregious, and the stock is up. Well, that's actually very reminiscent of the bottom, right? Stocks, we always talk about how stocks tend to lead by about 6 months. We had Meta today, Mark Zuckerberg's company, report earnings really well. Crushed earnings. I think the stock is up about 5% after hours. So I'm going to say hello to everybody in the chat in a second, but one of the things that I really think we should be paying attention to in this market, and it may be a little bit uncomfortable, right? And I've been taking a lot of heat on the X platform or Twitter, is slowly letting this market pull you back in. And it's going to be quite the juxtaposition because every single day, right? Every single day, you're going to have headline after headline. That's horrible. The sky is going to be falling. More terrible tariff news. The media lambasting you about how the Trump administration is, fumbling this presidency. You're going to have, stock market analysts coming out on mainstream television like CNBC and the like, saying that there's going to be no food on the shelves. That is very reminiscent of the bottom, and you're going to start to see a stark contrast in the reaction of stock prices. So over the last week, we've had a little bit of a rally in the market while the news keeps getting worse. So we may have a lockout rally here reminiscent of what we had just coming out of the pandemic when you had the news continuously getting worse over the next, say, 2 months, but you have a divergence in price. Remember, price of equities lead by about 6 months. So anyway, I see Hank P is here. It says you can't dismiss bad management and bad decision making, which I think is reasonable and will continue to drag the market. If you're following me, again, we can go back and forth on this all day. But if you're following me on the X platform, I've posted a lot of in-depth analysis on this, and particularly in this cycle, right? And again, this is why it's important to document this. And as an analyst or a PM, I know we have some portfolio managers in the audience. The market is the same always. It's never different this time. And it's very reminiscent of the 2022 bear, when I was even taking heat on this live stream. Many people on the right were saying I'm selling all my stocks, Biden is crashing the economy. But I'm like, well, if you look at the leading economic indicators, growth stocks are actually turning around and leading here. You have bank stocks turning around and leading here while the news continues to be terrible. So I would say if you're in the business of managing money, we're in the stage right now where I would turn off the news entirely and only focus on price, right? Because the pain trade to the downside is over. It just is. Now, I know that may sound uncomfortable to hear, but the risk is to the upside. And the risk has been to the upside for 2 weeks. You should have added exposure on that follow-through day and added more aggressively on the second follow-through day when we had it on Friday of last week in those leading names. Now, should we get a failure, right, you just cut those losses at 7% and then you wait for another follow-through day. But if I was a betting man, I would say that this low is in already, and the pain trade, as I say, the risk is to the upside. So I'm short vol, actually aggressively short volatility in this market. Now, yeah, we may have another pullback, but in my opinion, I think the risk is to the upside here. And what we should see is news and headlines coming in that are it's going to be egregious. Think back to, and again, go to my X page. If you follow @WalksWallStreet, I kind of laid out a framework for this. It was this kind of the same thing that I documented during the pandemic, when you had, I remember I was literally in this building right here, in this window, right there. That's where I used to live, literally in that window. And the doorman would drop off the Wall Street Journal to my door every morning, and I'd pick up the paper, and at the top of the paper was a running death toll counter of the coronavirus, right? Every day, big, bold letters at the top of the Wall Street Journal. I've saved all those papers, by the way. 10,000 more deaths of COVID, 200 more deaths in the nursing home in New York. And it was just like, my God, this is like the sky is falling. But you saw a total counteraction in price. And I think every market cycle has its narrative. 2020 had COVID, 2022 had the Biden administration and recession fears, and now the 2025 bear market, the narrative is going to be tariffs. Anyway, I want to be a GMO. Good to see you. Lori is here. Welcome, Lori. Lemonade, thank you so much for joining us. Doc7 is here. I'm going to say hello to everybody in the chat because I haven't seen you guys in quite some time. Josh L, thank you so much for joining. JK, always a pleasure. Joe Ratz is here. Cheers. Hubert, what's going on? Always a pleasure. Doc7 is always. Lemonade. Shanti, thank you. Ali, welcome. I see Kevin Rue and Rick C. Rick C, what's going on? Says, welcome back, Tom. Monday is here. What's going on? And Forward Go. Tom H from Okeechobee, what's going on? Emmanuel, Emmett, this is glad to be back. Tatted T is here again. Good to see you, Tatted T. Shane71 says, hey Tom, hope all is well. I think most of the tariffs are a long-term gain. The formula he used originally on Europe is supposed to back off, in my opinion. Now, maybe. Now, I'd also like to make this distinction, which I think is a very important distinction. And I was on a call about last week with a few very well-known hedge fund managers. And here's the distinction, and for context and full disclosure, about 60% of the PMs I was on the call with were right-leaning, right? Which means their political bias would be that of a conservative, or you could say Trump supporter, MAGA, whatever, right? The other 40% would be in the other category, right? On the left-leaning PM. Now, here was the main distinction, and something that I think is so important to pay attention to, discussed on the call, is that if you're in the business of running money, right? If you're a portfolio manager, you're either running money for clients, or you have your own, personal money, your family office money, whatever. The narrative that you hear in the media, right? The back and forth, the banter, the talk, whatever, is, are the tariffs a good idea? Are the tariffs a bad idea? Are the tariffs going to cause a disgusting, egregious recession? Which, by the way, we did just get a negative GDP print. We'll talk about that in a minute. Or is it going to be long-term gain, short-term pain kind of thing? That is a separate discussion than what is good for the market and where the market is going to go. So put your political cap in one bin and put your portfolio manager, your PM cap in another, right? Because if you're in the business of managing money, it may sound harsh to say this, but that's irrelevant. Whether it's good, whether it's bad, that's irrelevant. We could have that discussion on whether it's good or not, and maybe the left side of the aisle is right, or maybe the right side of the aisle is right. But it's so important not to fall down the rabbit hole of letting your political biases manage your portfolio. That is very, very risky. And that was really the number one thing discussed on the call, and it was very reminiscent of exactly what we were discussing during the bear market of 2022. And a lot of people that I know who were MAGA Trump supporters blew out all their 401ks, busted all their retirement accounts right at the bottom of 2022, when, if you remember correctly, I was on the stream pounding the table saying, look, market internals are improving. You now have over 50% of the index trading back above the 200-day moving average. You're starting to see the major investment banks and the boutique banks leading. So follow the price, okay? Don't worry about Trump. Don't worry about Biden. If you're managing money, if you're actively managing your portfolio. If not, and you want to debate the politics, more power to you. But this show tends to focus more along the lines of money management, stock picking, and the like. So there's a clear distinction, and many people think that there's not a distinction, but there is. There is. I think we may have some internet issues. Hey, Cindy, good to see you. Welcome. Matthew M. Cheers to you. This is Hey Tom and team. Great to be here. Hope you're 2025 as well. Everything's going all right. Everything is going okay so far. I did have, I guess I'll tell you guys why I was gone for so long. I was sick for like a month. I had this very, very, really aggressive, I think it was like a flu that turned into a sinus infection, and I couldn't get rid of it. And it's not that I felt sick per se. I had these unbelievable headaches, like the worst sinus headaches that you could think about. That's what I was having. So I was like, I'm not going to do the stream because I can't I have a history of sinus issues, and I can't walk around in the freezing cold because this winter, well, I should really say this spring in New York was rather brutal. It was terrible. The weather was just terrible. It was, rainy, windy, cloudy every day, and I really didn't want to push it. So I'm like, I'm going to get some antibiotics, which now I'm on antibiotics and I'm feeling a lot better. But I don't know what was going around, but I was out for like a month. Again, not necessarily feeling sick, but just the headaches were just, my God. Then I had some other issues that I needed to deal with at the same time. So it was kind of like, when it rains, it pours kind of thing. So hopefully we'll be good, back to a normal-ish schedule. As you can tell, I still have this kind of cough thing, but and then I was dealing with some, health issues in the family that I had to deal with, and it was just a lot. It was a very, very, very busy April. Well, March and April. Anyway, Chris Thompson, thanks for joining. Hopefully you're doing well. John Doe, this is Brooklyn, New York here. Good to see you, John Doe from Brooklyn. Michelle Henry, thanks so much for joining. Tap out. This is Lucid on your radar, still hovering around $2.50. Lucid is not on the radar in terms of buying the stock, but Lucid is on the radar in terms of me maybe buying the car. We'll talk about that later. Now, what is an EV company that is on the radar of buying sounds crazy, but it's actually Tesla. And that pretty much is a company that violates every single rule that I have in terms of new purchases. But I think the risk is to the upside for Tesla stock. For a few reasons. Number one is, the big elephant in the room. I'm not sure if you were listening to the earnings call for Tesla, which was just terrible, by the way. The earnings were terrible, but the reaction to earnings were fantastic. If you have a stock that is so beaten down, and then it reports an earnings quarter that is so horrendous, and the stock gaps up and runs for the next 3 days, that's something to note. I think the market is sending a strong message that it was a bad idea for Elon Musk in terms of a business decision to get so involved in politics, right? It's been very polarizing. There's been domestic terrorist attacks on Tesla dealerships, vandalism, and that's really impacted sales. So now that Elon came on the call and kind of addressed that and announced that he's going to be taking a back seat to politics, and focusing on running the business, I think the market is viewing that in a favorable way. Let's check out 53 West 53rd Street. Hey, Chris B, what's going on? Says Tesla is not in a good place to buy in at the moment. I think it's actually, from a risk reward standpoint, I think you could probably buy the stock today. Again, not investment advice, but again, it's well off the highs. I usually don't buy stocks that are well off the highs. I usually buy stocks that are into new highs, but I think Tesla may have its own exception. So we'll see. Connie Ruiz, welcome. Anyway, we're outside of 53 West 53rd Street here. Allen's is breaking. Tesla board of directors have just reportedly opened a search for a CEO to succeed Elon Musk. Wow. Well, right on time. I'm sure the stock is up on that. Maybe it's up in after hours. That's hilarious. Honestly, may not be the worst idea, right? may not be the worst idea, because again, to review, regardless of your political opinion, right, whether you lean right or whether you lean left of the aisle, I think it's pretty clear that Elon, whether you agree with his politics or not, there's a lot of people that disagree with his politics, and it's tarnished the brand, okay? And I'm a big Elon supporter. I love Elon, I love Tesla, and I think it's pretty clear to see, okay? Anyway, but Alan, thank you so much for your $5 donation. I appreciate you very much. DC322 says Canada also. We got to talk about Canada a little bit, because the new Prime Minister of Canada is a big Wall Street guy. I think he got his start at Goldman Sachs. I am familiar with him, and in terms of his personality, I think he's going to go head to head with Trump, and the media so far is kind of framing that in a negative way. But I actually think this is a positive for Canada. Again, won't dive too much into the politics, but I actually think that it's going to be very a business-friendly environment, in stark contrast to what the vast majority of people think. But we'll talk about that another night. We're just going to ease into things here. Again, here's 53 West 53rd. I'm going to catch up on some of the comments. Lori says, I had no idea you left. I just happened to come and see you tonight. That's awesome. Pete is here. Good evening, Pete. Good to see you. Thanks for joining us. DC322 says EU is opening up to BYD EVs. And BYD is a great company. BYD is really, really killing it. Now, to DC322's point, if we talk about thematics, right, thematic investing, the future is electric vehicles. It just is. The future is also autonomous vehicles. So you want to be in that theme. If you just think broadly, right, as we kind of develop an investment thesis, I like to start, top down, bottom up. The big themes are obviously AI, autonomous driving, and EVs. And if you look at some of the stocks in the market that were bucking the trend when the market was getting creamed, one of those was actually Uber. Uber held up fairly well. If you look at a weekly chart of Uber, it's kind of forming this handle on top of a stage 1 IPO base. And a lot of people think that, Uber is going to kind of take a back seat and be deprioritized, if you will, and be a direct competitor with Tesla and Waymo and the like. But I think they can all live together. John is here, says good to see you back. Thank you so much, John. I appreciate that. Patient Lobster says, hey Tom, glad to see you back. Greetings from Israel. Hopefully you're staying safe over there. Thank you very much for joining. I appreciate that. Bree Grams, thank you very much. We'll take one more shot at the Steinway Tower. Paul says, Tom, how safe would you say autonomous driving is right now? I'd say safe enough, but not where it should be and not where it will be in a few years. So I don't have any personal experience with full self-driving. However, I have been driving around the Tesla Model S, in which case I will be publishing some videos to this channel of me driving the Tesla Model S, but on autopilot. And I can tell you with 100% certainty that it is very good. It is extremely good. Now, again, it's not full self-driving, it's that driver assist. So if anybody here has a Model S, you just press in one of those little roller things on the steering wheel, and if you're on the highway or something, you can become totally hands-free and the car will steer itself. And it's really the most impressive thing that I've honestly ever seen. Obviously, I don't live in San Francisco, so I don't have any experience with Google Waymo, which I hear is an unbelievable product. But hopefully, as Tesla continues to roll out its full self-driving, I'll be able to try it out. But it's a game changer. And when we talk about what is the TAM, or what is the total addressable market of autonomous vehicles, I don't think you could put a price on it. I think it's infinite, right? Because then you get into the conversation of what is the price of a human life, right? Statistically speaking, I think we have like 400 people in the live chat right now. Statistically speaking, at least one of us either has a direct family member or knows of somebody who's a friend of the family or something like that, who has lost their life in some sort of vehicle accident that involves impairment, right? Whether it's driving under the influence, DWI, something like that. That goes to zero overnight once you have a true robo-taxi rollout. So what is the price of that? What is that going to do to the insurance industry when you don't have, what is that going to do to the cost of your insurance premiums when you don't have the risk of, speeding and getting tickets and crashing into things because it's full self-driving? I think a lot of people are severely underestimating the dollar amount of the TAM in the long run. Mondays here says OWIs in Wisconsin have always been and always will be so bad. Matthew M says my hometown just had a mass casualty. Car crash due to a medical event. Sad and pray for a safer future for transportation. Yeah, that's terrible. I mean, one of the safety features for the Teslas, what is it actually called, everybody? Maybe you could put it in the chat. It has that automatic braking. So if you step on the accelerator, if you're driving a Tesla, and you just take your foot off of the accelerator, the car will automatically slow down. It will automatically brake for you. So, God forbid there was some sort of medical incident, the car would just kind of come to a full stop. Yeah, I mean, the future is going to be very, very bright. The future is very, very bright. Anyway, if you guys are enjoying the live stream so far, feel free to leave a like on the video and click the subscribe button if you're new. Regenerative braking. Thank you very much, Monday. You're correct. Kathleen says, hey Tom, my father was killed by a drunk driver. Anything that improves safety is a great development. I'm really sorry to hear that. I'm sorry for your loss. It's terrible, but like you said, anything that improves the safety is a great development for the future. And let's say in a city like New York, which I'm very perplexed at the fact that Tesla and Waymo haven't rolled out in a city like New York. I feel like it'd be so easy for them to do that. I mean, it's like a grid system. At least, Waymo and everything is going to roll out in Miami, Florida. But imagine, none of this craziness. You'll just have robo-taxis. Think about all the people who die on bikes, cycling, road rage. All that, in theory, is going to go to zero over time, which is really great. But again, Kathleen, I'm really sorry for your loss. It's terrible. Hey, Room C, good to see you. Thanks so much. Yeah, it's been a while. I was a little under the weather for about a month, and then I had some family health issues, but we should be back at 100%. If you guys are kind of just joining, one of the main things we covered at the very beginning of the broadcast is just a brief market update. And since we've been away from the stream so much, if you're not following us on X, at Walks Wall Street on X, please do, because I give my market updates pretty much every single day. And it looks like the bottom is likely in for the market. And we covered some reasons why. Covered some reasons why I'm short volatility in this market. It looks like the VIX peaked about a week ago. You'll probably have a little bit of back and filling on the indices, but I do think that risk continues to be to the upside, mainly due to those main factors that I look for at a market bottom, right? Extreme bearish sentiment. I haven't seen bearish sentiment like that in my life. A VIX, a CBOE volatility index going to Mars. We pretty much tagged the COVID highs on the VIX. Put to call ratio went to Mars, and you had mass liquidations at the bottom. We had 2 follow-through days, and the leaders in this market right now appear to be Netflix, trading into new highs. Another leader appears to be Spotify, ticker symbol SPOT, and a few others that are trading into new highs. We also may get another pickup in a lot of these cyber stocks, but in general, one of the main things that we want to look for as the market is just emerging from a bear market are stocks that have gone down less during the bear market, right? So you don't want to be buying the dog shit, excuse me, you don't want to be buying the nonsense stocks that have been beaten down 80, 90% as the market went to correction, right? So as the S&P pulled back 20+%, as the NASDAQ pulled back 25+%, you want to look for the stocks that went down the least, that are trading at 52-week highs and into new all-time record highs, right? Why were portfolio managers on the street not selling those stocks when the market was getting cut, right? Again, remember, PMs want to trim the worst ideas. So they trim and they sell the worst performing stocks in the portfolio. Usually the first stocks out, up and into new highs, as you're emerging from a bear market into a bull market, are your new TMLs that are going to go up the most in the new bull. So look for stocks that have high relative strength trading into new highs or new all-time record highs. Hank P says, Tom, I like your calm attitude in the sea of distrust, disruption, and destruction. It's great hearing you again. I appreciate that. Again, and this is something I learned through a few market cycles. And what's really helped is really just me being close to some portfolio managers on the street that run a ton of money and have been through a lot of cycles, right? And usually when you get that first follow-through day, right, the news tends to still be, and I'm not trying to sound like I'm repeating myself, but we have been gone for so long. When you get that first follow-through day in the market, you never, ever, ever want to buy. And I have data on this going back to when I first started to run money, right around 2013, 2014. The news is always so bleak, but the market always takes off first, right? We talked about the big theme, right? I think the most notable that everybody knows is the pandemic, right? We got our first follow-through day when the Wall Street Journal was printing the death toll from COVID on the front page every day. Okay, I mean, just think about how crazy that is, right? That we lived through that. Every day on the front page of the Wall Street Journal, a rolling death toll counter of how many people were dying from the virus as the market was taking off into a follow-through day, right? Nobody wanted to participate in that. It's going to be the same thing here. So I retweeted a lot of stuff on my X account that you're seeing, right? You had that Peter Tulchman, I think, who's that broker, one of the most photographed brokers on Wall Street. He made an appearance on CNN talking about how there's going to be, no food on the shelves. There's going to be no food at Walmart, and he was with this other analyst, Dan Ives, who I respect a lot. He's one of the greatest analysts on Wall Street. They did a tag team interview on CNN, essentially saying, hold on, let's just cross the street here. Essentially saying, the shelves are going to be empty, corporate earnings are going to, crater, we're going to go into a massive, massive recession. You never see these guys on a nightly, primetime CNN, okay? That's stuff that you see at the bottom. So when you see that negative, just unbelievable negative stuff, while the market is moving in the opposite direction, that's usually a telltale sign that you're at least near a bottom. While the VIX is rolling over, right? We've had, I think, a 45% drop plus in the VIX now. So again, anything can happen. Obviously manage your risk, but I still do believe that the risk is to the upside in this market. You may have a very, very reminiscent lockout rally that you had in the NASDAQ, where coming out of the pandemic, the NASDAQ followed the 21-day. The NASDAQ didn't even correct to the 21-day moving average coming out of the pandemic. So every bull market has its narrative, right? And every bear market has its narrative. The narrative of this bear market is the tariffs. You're never going to hear the end of these goddamn things. Okay? You're never going to hear the end of these tariffs. The tariffs will be the talk of every article that you read, every news segment that you watch on both Fox News and CNN. At this point, it's not worth paying attention to it, in my humble opinion, right? I'm just giving you my opinion. The pain trade of the tariffs to the downside already happened and you missed it. That's just my humble opinion. I always like to come onto the stream and shoot it to you straight. So there's no added benefit to your life of reading and watching these clips about tariffs in particular, because it's just going to be a very, very high click rate headline, right? Same thing with COVID. Every day is the same article about how many cases and this new strain and this new variant and this new shot, and it's like, my God, it never ends, right? All the while the market is peeling to the upside. It's going to be the same thing. These tariffs are never going to go away, okay? You're going to have, headline about, Howard Lutnick said something stupid, and, trade talks are back on with China. And then the next 2 seconds, it's going to be, China says that there's no trade talks. It's total noise. At this point, it's noise, and ignore it. Just don't even pay attention to it and just watch the price. That's what's it called? I think that is the stage analysis of this market so far. The tariff news and the noise in the headlines don't have any edge anymore in terms of your trading, in my humble opinion. Douglas, good to see you. Ben says the markets are already adjusting to the tariffs. Variety 1985 says if tariffs never go away, then we have a VAT tax upon us. Let me rephrase. Maybe I'm talking about the news in relation to the tariffs. Again, the news in relation to tariffs will never go away, because that is what is going to drive the most clicks, the most headlines in the media to sell advertising. So if you notice, how many articles came out from Fox News and CNN that were in regards to tariffs over the last 2 weeks that turned out to be total bullshit? I would say 90% of them, okay? All the articles coming out about the tariffs in a positive light from Fox News, most of them were bullshit. I'll try to stop swearing. And most of them coming out about the negative impacts of the tariffs from CNN and the like were nonsense. It's just, rumors from a source close to the president, Howard Lutnick's going to be gone, and, Scott, Mr. Besson is going to be gone because they're feuding. It's just all noise nonsense, okay? Or if you see this headline, trade talks are on with President Xi and it's going really well and we're going to get a deal signed in a week. It's just, don't worry about it. That would be my advice, because they're headlines that are not true on either side. You won't know the real news about these tariffs or these deals until you have it penned in ink. So until I see something in ink, right, a deal signed in ink, I just skim over those articles. That is the point where we're at. And maybe many of you disagree with me, and that's fine. But again, this is from a frame of a money manager. If you are just watching these headlines and you see the market going in the other direction, and you're like, what how can the market be going up? How can we get a follow-through day? There's going to be no food at Target. There's going to be no food at Walmart. Look at this article from CNN, or look at this article from Fox News. Like, you look at it. Don't look at it. Don't look at it. Just follow the price. Hey, good to see you, Joe. Darren, welcome. Darren says eventually it will work out. That's a possibility, but what's also a possibility is that eventually it doesn't work out and the tariffs turn out to be a big disaster. That's also a possibility, right? But the price action will tell us that, right? The market will let us know if it's going to be a disaster or not. Don't allow Fox News or CNN to tell you if it's going to be a disaster or not. Again, at this stage, and according to the VIX, right? So the VIX is the volatility index, or the fear index. And we already had that massive move in the VIX, right? The VIX has collapsed, which is essentially the market saying, okay, we were spooked by the blanket tariffs. Nobody knew what was going on. And as this VIX comes crashing down, somebody in the market knows what's going on. It may not be good, it may not be bad, but volatility is contracting. And you're starting to have stocks react in a positive manner, particularly during earnings season, right? Remember, it's not in this earnings season in particular. What's more important now is not the earnings in and of themselves. It's not. What I'm looking for is not the actual, how much money did Meta make? How much money did Tesla make? How much money did Walmart make? That is actually not as relevant as the reaction to the earnings. Meta reported a great quarter, but Tesla reported a shitty quarter, and the reaction was positive, right? So as we go through this earnings season, it's going to be critical to pay very close attention to how these stocks are reacting. Right, Netflix reported great earnings, they had a good reaction to earnings. So if money managers and if the smart money is rewarding these companies, or rewarding these stocks, that is going to be an indication of if this is going to be a disaster or not. If this thing all falls apart and starts to unravel, well, then you could dial back your positions. But don't, at this stage, and again, I'm trying not to repeat myself, hopefully I don't sound condescending, do not get caught up in arguing about, the tariffs. Don't get caught up in these headlines from either, Bloomberg, Fox News, because all of them are going to be fake. It's impossible to know, right? Just think about it this way. Many of the breaking news headlines that I get across the Bloomberg terminal are, from inside source, says that tariff talks are going well with Japan. And then it says from inside source, Japanese government officials say that they're not ready to make a deal. From inside source, to me, that's BS. So take a back seat on the tariff stuff. Wow, Bryant Park looks great tonight. Hey, what's up, Edison? Welcome. Joe Driver says Jerome Powell is going to get fired. Wasn't there an article that said that Trump is going to fire him, and then there was another article that came out that said that Trump is not going to fire him, even though Trump doesn't even have the authority to fire the guy. Anyway, hilarious. Chair Powell takes a lot of heat. I actually think he's doing a good job with what he has. Think about this, logically for a second. In this environment, right, being Fed chair through the Biden administration and now the Trump administration, with all the crazy reckless spending from both administrations, that is not an easy thing to deal with as a Fed chair. So sometimes I have to kind of put myself in check because I can kind of, lambast Fed Chair Powell. But he doesn't have it easy, okay? try being the Fed chair, and every day you have, President Trump firing off on Truth Social, lambasting you about how you're slow and how you're, fumbling the bag and all this stuff. It's not an easy job. It's definitely not an easy job. So I'm gonna show Fed Chair Powell some grace. Here we're looking at the beautiful One Vanderbilt. I'm so glad that it's now summer weather in New York. It's beautiful here. Matthew says, yes, don't worry about the tariff talks. But the thing is, the country and the world are reacting very negatively. And they'll always react negatively. There's again, kind of going back to, I would say, spend this time doing a post-analysis of every bear market, right? And now with ChatGPT and with Grok, it's very easy to do that because you could pull tons of historical data. And in every bear market has its own thing to worry about. There's always going to be something to worry about, right? When we had, think back to Trump's first term, right? When we had that stock market correction in Trump's first term, I still have some of the newspapers I saved. And at that time, it was the China trade war. We were in a China trade war in Trump's first term. Then you had the 2018 Christmas Eve crash. Then you had the 2020 COVID crash. Then you had the bear market of 2022. Everybody's saying that, Biden and DEI and all this stuff is going to crash the economy, and we're losing our top talent to other countries. So there always is a narrative, and there always will be. Okay, always, always, and forever. But the key tell, again, and I apologize if I'm repeating myself, is when you see stocks reacting positively on worse and worse and worse news. And in addition, it's the same thing that you see at the top. When you see stocks starting to roll over, but NVIDIA just reported an earnings report where they crushed, but the stock has an adverse reaction to the news, that's probably a top, right? When you see divergence between price and news, those are usually big turning points and inflection points. There's a really good piece that was written by George Soros, actually. And I'll try to pull this up. I think I have the PDF. At least, actually, yeah, I 100% have the PDF. I'll try to share it with all of you. But George Soros essentially made all his money at major market inflection points, right? So essentially his theory, and which is kind of what Stan Druckenmiller and all those kind of guys follow, is that you have your main inflection point, your big moves, right? Just like 2 weeks ago, we were staying up until midnight, watching the market hit circuit breakers and limit down, right? And then you go through periods of low volatility, and it's a slow grind higher, or it's a slow grind lower. And that usually coincides with the juxtaposition in news. Then you have coincident indicators where positive news will match up with positive news, or bad news will match up with bad news. And then the inflection point again will be a juxtaposition. I'm going to try to dig that up, but it's a very, very rare piece. Not a lot of people have it. I have it. And it's very good. Anyway, this is looking up at the Bank of America Tower and the Salesforce Tower here. And we finally have this beautiful lawn at Bryant Park. Look at that. This thing is really stunning. Joe says, what bothers me is that some countries are advising their citizens not to vacation to the United States. I think broadly a lot of that stuff is temporary nonsense too. I mean, you know, anecdotally, I was in Miami, there were tons of Canadians and we were all partying and having a good time. I don't think that has long-term sticking power. I don't really think the average normal person who's not like a turbocharged political extremist doesn't really give a shit. I mean, you know, I tend to lean towards the right side. I'm a conservative, but I break bread and have fun and chill with people from all political spectrums. I don't give a shit. Hey, what's up, Rocky Rocks? Good to see you. Also, another thing that we didn't cover. Is global money supply. So think this through. And I was on a call a few days ago, and an analyst brought this up. That is very, very telling. So the tariffs created a major shock through global economies. And what is the first thing that global central banks did to kind of combat the tariffs? Well, they started to take a less aggressive tightening stance. And you're really starting to see central banks around the world easing and exacerbating an easing cycle. So you'll probably see interest rates come down across the board, even though you haven't really seen that in the United States. If anything, you've seen interest rates go up. But over the long term, you're probably going to have central banks globally ease and print a bunch of money. And it looks like the market is kind of forecasting that and forward looking to that right now. So there usually is a correlation between asset prices and global money supply, which is also coincident with the price action we've been seeing in gold and we've been seeing in Bitcoin. I know we haven't been doing the streams in a really long time, which I apologize for. I've been sick and I had some family health issues. But how many of you remember, right, months ago, a year ago, when gold was like 1900? Us pretty much every day coming on the stream and saying this is the biggest cup with handle pattern I've ever seen in gold, and our price target's 3,000. Well, we blew through 3,000 and we went all the way to 3,500. Same thing with Bitcoin. We traded all the way up to about $111,000 or $108,000 or whatnot. And now, you know, gold is well above a 3 handle, and we're back above 94,000 in Bitcoin. What is that? What is the market telling us there, right? If you have hard assets like gold and digital gold, Bitcoin, rallying in the face of a stock market sell-off, this is what I would like to call a decoupling, right? Think about the COVID crash. You know, Bitcoin had a massive sell-off. Think about 2022 when we had that brutal bear market. Bitcoin and gold had these massive sell-offs, but this time it was much different. You know, you're seeing a massive positive reaction in gold and Bitcoin, and I think Bitcoin is going much higher. I think this cycle will probably see $150,000 Bitcoin. Matthew M says, God bless this stream being back. It's been on my mind, and enjoyed your Miami videos recently too. Yeah, I'm happy to be back too. It's definitely, it's really fun. It's really fun. And I enjoy hanging out with you guys each night. Yeah, it's really fun. So I guess we'll just quickly talk about on a go forward what the schedule is probably going to look like. New England Crypto, good to see you. Probably what the schedule is going to look like going forward. I'm really going to try to do these streams every night at 8:45. Maybe we'll take off Wednesdays, just because I have obligations on Wednesday nights now. But by and large, we'll usually be live at 8:45 p.m. However, I do still want to continue the standalone videos because I also enjoy filming them, and I think it gives people a different perspective of the city, right? Especially, the outer boroughs. So if you're subscribed to the channel, we will be posting daily standalone either Miami, Florida, or New York City walking tours in 4K. And I'll probably put them up around 4 p.m. Eastern time. So if you want to check those out, that really, really does help the channel a lot. Mainly because it puts, I get a lot of leads from those videos. Oh, and by the way, another big thing that, which also was another reason why I couldn't do the live stream. I was sick, I had a family illness, but we also accepted a pretty big deal to take our firm to Corcoran, and kind of hammering down the logistics of that, moving our office. So yeah, Corcoran offered us, well, it was enough for us to move to their company. So instead of being at Douglas Elliman, we are now at Corcoran. And I'm sure maybe some of you saw the headlines in The Real Deal and things like that, but you can look it up, Google it, Kirsten Jordan team. So we are over there, which ironically though, the new office that I'm in is right across the street from where I used to be. So it really wasn't that big of a move, but yeah, so it's been a lot going on. Hey, what's up, Joe C? Welcome. Patrice, what's going on? Chris says everyone looks like they're not working. Of course, it's almost 10 o'clock at night. Stephanie says, hey Tom, I'm just turning 20. I have a job and saving money, but I'm concerned on where to put my money to where it would be safe and where I can get the most out of it. Where would I recommend? I unfortunately can't make any recommendations on where to put your money, as I'm not licensed to do so. That's just the way the rules work in the United States. But I would say if you're interested in the markets, you seem young enough to where, 20 years old, maybe you can get an internship or something along those likes, and maybe find, let's just cross the street here, a mentor of some sorts if you want to work in finance or work for a money manager. But generally speaking, the corporate profits in America tend to go up 8% a year. S&P 500 over the long term tends to go up roughly 7 to 10% a year. So, if you're 20 years old, if you just use a compound interest calculator, obviously nothing is guaranteed. But if you don't want to actively manage your money and you just want to passively invest it, maybe check out the S&P 500. I can recommend a book, which I think is a very good book for anybody to read. It's called The Little Book of Common Sense Investing. The Little Book of Common Sense Investing. And it's by Jack Bogle, or John Bogle, who is the founder of the Vanguard Group. He unfortunately passed away, but he's really the founder of indexing. And maybe you're not interested in the markets, maybe you just want a safe place to save your money and compound out your wealth. just check it out. But the biggest thing is just the time, right? You're 20 years old, so you're very young. If you just save over the long term consistently, you know, you're going to be fine. All right, now we're on Broadway. I mean, I remember being 20 years old and thinking that 30 years old is like so far away, right? Oh my God, 30-year-old person, they must be so old, I can't even imagine it. But I'm actually turning 30 next month, which is crazy to say, but I am. And it goes by very fast. And I feel the same way, generally speaking, as I do now, as I felt at 20. So what I would say is just focusing at 20 years old on, you know, incrementally over time, increasing your income, right? Focus on the driver, which is increasing your income and delaying the instant gratification, especially if you move to a big city, right? Maybe you're 21, 22 years old, you know, you get a big job in Manhattan or San Francisco, you're making a few $100,000, you know, you want to buy a Rolex, you want to buy, you know, you want to spend money on, you know, going out to clubs and partying, and you could blow through that money very fast. But if you sacrifice, you know, let's say 20 to 27, and you really put your head down, you make a very good income, and you just save and invest all that money, you're going to have a lot of money by the time you're 30. Trust me, okay? And then you could pretty much do whatever you want. Pretty much do whatever you want. I think the best kind of career advice I got early is don't really follow your passion, actually. Because I'm passionate about, you know, kicking a soccer ball around. But, you know, I'm not going to make any money playing soccer. When you're young, you should find out what you're good at and do that. Like whatever you have an expertise in a very, very high-paying industry, do that first. Because let's say if you're an amazing computer programmer, right? But you really are passionate about art, and you really want to move to New York City and be an artist. Well, maybe do the computer programming first, make a bunch of money from 22 to 27, you know, save a few $100,000, maybe even $1 million if you work for the right company and you get equity in the company, and then go do your art thing at 27 when you have a few $100,000 in the bank, right? So pursue your stability first, do a short-term sacrifice, and then do whatever you want. Travel the world, you know, do that. That's kind of the piece of advice I got. Jamie Pope, what's going on? Thank you so much for your $25 donations. It's great to see you back on the walks. Really enjoy the neighborhood shows. Keep producing. Thank you, Jamie. I appreciate it. Thank you for your support. Much appreciated. Yeah, again, like I said, I'm really happy to be back. I really enjoy doing these live shows. Really, really enjoy doing it. So thanks everybody for joining, and thank you for your support. Kathleen has realized that Barbara Corcoran is no longer with the Corcoran Group, but her bio is fascinating. A real self-made woman. Yeah, so she sold the company a very, very long time ago. Sometimes she's around, sometimes she'll pop in. But yeah, she is no longer affiliated with the company in any way, shape, or form. That is correct. Paul Davies, Says, haha, Tom, you'll feel that same way at 50 as you do at 20. Hopefully, if we keep doing these walking tours, right? I mean, if I take a few hundred or a few thousand steps a day, maybe it'll keep all the health problems away. You never know. Anyway. Darren says the 60s are awesome. Now, you know what, another, kind of being on another optimistic note, we're in the year 2025, and there's a lot of amazing advancements going on right now in biotech. So it may sound crazy, but by the time my kids are my age, right, so by the time my kids are 30 years old, the average life expectancy could be exponentially higher where it is now. We may see people living to 150 years old, right? If you've done any research into like CRISPR gene editing, it's very possible that in the future, we will have the ability to edit away cancers and different types of diseases. It's very possible. Look at the new recent advancements that we've made with Neuralink. If you're not following me on X, if you have an X account, you can follow @WalksWallStreet. I retweeted something from this gentleman. He's the second person to get a Neuralink chip in his brain. And with that chip, he's able to communicate now. Like, he was literally writing this tweet just by thinking about it. And the first person who had the Neuralink chip in his brain, he was able to play chess just by thinking about where he's moving the pieces, right? And this is the year 2025. Think about what it's going to be in 2030 when somebody who's bound to a wheelchair and they're mute will be able to now walk and talk due to this chip being in their head, right? Things are going to get really, really crazy in a very good way. So, which is also, why I keep saying, I think over the next 10 years, we're going to have a very, very strong bull market in biotech. So if anybody has a biology background or an engineering, maybe biomedical engineering background, I think you're going to do really well. I just don't have that expertise. I don't know which drugs are going to pass their clinical trial. I don't know which drugs are going to get FDA approval. I'm not a smart guy. I don't know any of that stuff, right? That's way above my pay grade. So I think if you do have that expertise, or maybe if you're even a medical doctor and you've seen or participated in some of these trials, the pipeline of drugs that are coming down the pike, and these things are going to be game changers, okay? Game changers. Speaking of game changer, look at that view of the Empire State Building. Amazing view. Stunning view. Anybody remember that stream when we caught the lightning strike on top of the Empire State Building twice, 2 times? Wow, look at the color scheme. This is the color scheme that they usually have for New Year's Eve. Oh yeah, that's right, it's the Macy's Flower Show. Look at how nice they make the windows. Wow, Amy T says, Tom, it's the Empire's 94th birthday tomorrow. That's crazy. 94 years, Empire State Building. I guess we'll take a quick break and check out some of the windows here. I see D is here. What's going on, D? Teresa Diaz, welcome. Hey, Mike G, Mr. 15 Central Park West. Thanks for joining us. Hopefully you're doing well. New England crypto, what's going on? New England crypto, you probably already know this, but massive news coming out of the crypto markets. Our good friend Mike Novogratz is set to IPO Galaxy Digital. It's going to be listed on the NASDAQ. Now, I've told you guys about this company over the last few years. Now, Mike Novogratz, he has a very interesting career on Wall Street. He started off as a military helicopter pilot in the Marine Corps, I believe. Now, after he got out of the Marine Corps, I think his friend gave him a referral to work at Goldman Sachs. And he made partner at Goldman Sachs right before they were going to IPO. So he made a bunch of money in the Goldman IPO. Then he went over to Fortress Investments, made a bunch of money there. And then he spun off and made his own company, Galaxy Digital, which is essentially a cryptocurrency company that helps onboard institutional investors to get exposure to Bitcoin and other types of cryptocurrencies, and it looks like they're going to go public, which is massive, okay? The reason why it's so massive is because this is probably going to be the first benchmark company around digital assets going public of many, many, many to come. I think you're going to have a mini bubble emerge over the next 5 years in crypto-centric initial public offerings. So things are going to get crazy. Things are going to get crazy. And, you know, individual investors are extremely underexposed to Bitcoin. That's all I'll say about that. But yeah, I'm excited for that, and congratulations. We do have a few people who watch this stream that work at Galaxy Digital, so congratulations on the listing. I think that's going to be awesome. Hey, Brad's brain, Mr. Palantir himself. Good to see you. Welcome back. We were just talking about kind of what to look for at market bottoms, right? I've been kind of posting about this a lot on X, saying that when the market is in its bottoming phase, right, you don't want to pick the dog SHIT off the bottom, right? You don't want to be buying these stocks that are down 80%, 60%. You actually want to do the opposite and look for companies who are making new highs, right? We talked about Netflix. I sent you, I think a week ago, I sent you, we were briefly DMing on X on that follow-through day. I remember, it was funny, I was on the Metro North. We had the follow-through day. I was getting filled all up into the close. And I was like, I gotta message Brad. I was like, I gotta tell him what I bought. And I was like, I was texting everybody I knew. I'm like, we got a follow-through day, what did you buy? We got a follow-through day, what did you buy? And I think you said you added some Palantir on the follow-through day. Anyway, 32nd Street, Korea Way. Look at this place. This is a Squid Game experience. Tony Beats is not sure if you covered this before. How do you think cryptocurrency will affect the future of real estate, if at all? The same question with AI and real estate. Well, I see long term, and a lot of people disagree with me, and that's okay. I think we're going to enter the world of tokenization. Everything will be tokenized. Everything that you own, everything that has value will be on chain. Everything. In which case you'll be able to have fractional ownership, pooled ownership, community ownership, everything. So there will come a time where real estate will be on chain and will be tokenized. You may be able to tokenize yourself, right? You may be able to raise money and tokenize yourself to send yourself to college, right? And say, hey, you know, I'm launching my own, you know, I hate to say coin, but you could put parameters to where maybe you can make yourself an investment. Hey, I'm looking to raise $100,000 to go to college. I'm going to do a direct listing, and you'll get a 2% graduated payback of whatever I make for the first 10 years out of college, right? Something like that. Everything will be on chain. So the real estate business and the real estate market, both commercial and residential, are some of the most antiquated, old, outdated ways of doing business. And mainly it's really because it's been a monopoly. We could talk about that really at length. But I foresee a point in time where you'll be able to, do sizable transactions online and on-chain. Got the nice TD sign there. We'll actually walk back to 6th Avenue and go around the block. I just don't want to walk under the scaffolding. Andrew O'Donovan says, I think Robinhood is great. Really appeals to the younger investor, especially new investors. It does better in volatile markets. Yeah, I kind of equate Robinhood to our modern day Charles Schwab, right? If you do a post analysis, what I recommend if you're interested in Robinhood, I would go buy Charles Schwab's book. I think it came out maybe 3 years ago. If you just type in on Amazon or on Google Charles Schwab book, it'll come up. It's an amazing book, and it's all about how Schwab built the broker-dealer of the future, right? And really went up against the status quo on Wall Street to become, a discount broker and really revolutionize the industry. I think now is Robinhood's time. And I think you make a really good point, Andrew. You make a great point, because the future of finance and how people invest money is in the hands of the people who are 20 years old, 30 years old, 40 years old. And we're about to enter the largest wealth transfer event in human history. There's going to be more wealth inherited by the next upcoming generation, which is the millennials, than ever before in human history. Now, why is that relevant? Well, if you have to look at habits and pattern recognition. Many millennials, right, Gen Z, are interested in digital assets, Bitcoin, cryptocurrency, and the like. And when you have firms like Vanguard saying that they're not going to offer those products to their customers, well, their customers are going to go to places where they feel welcome. And by and large, that place is Robinhood. So it's kind of like a skate to where the puck is going. And I know that sounds very uncomfortable to most maybe older folks, but you have to lean into the innovation. Like, I know a lot of smart people, a lot of very, very wealthy people that just won't even think about touching Bitcoin or cryptocurrency. They don't even want anything to do with it. I think it's a mistake. I think it's a big mistake, because the asymmetry in the trade is unbelievable. It's unlike anything we've ever seen. When you have certainties in life, the opportunity to generate alpha from those ideas go to zero, right? It's when there's uncertainty where it most likely won't work, where it sounds like a good idea, but it may not work. That's when you have the opportunity to generate outsized returns. When everything is a surefire, 100% it's going to work, well, the probability to generate outsized returns diminishes significantly, right? I mean, I'm trying to think of a good example here. Anybody ever watch one of those podcasts where, maybe like they're interviewing Mark Cuban or something, or I think most recently I was watching this interview with the comedian Kevin Hart. I'm sure everybody knows Kevin Hart. And Kevin's a smart guy. He's a really smart guy. I was actually really impressed with the interview. In any event, he was telling a story about how he was offered to invest in the Uber IPO. And he's like, no, I turned it down because I thought it was too risky, and they were asking me for $50,000. And at the time, Kevin Hart was still a really rich guy. He's probably worth $100 million. And he wouldn't give him 50 grand. I mean, 50 grand to him is like nothing. It's like, it's like a little pissant of an investment, right? But the uncertainty was so high. It's probably not going to work out. I'm going to pass it. Well, that 50,000 is probably worth a hair under $1 billion. I think Mark Cuban passed on the Uber round as well. I think his investment would have been multi-billions of dollars. Now, it's not just to say go invest in a bunch of really, really risky things, but when you have an asymmetric bet where you only have to put in a little bit to kind of test the waters to make a ton, right? That's called asymmetry. So you've seen this cycle. We've had about maybe 10 really, really, massive cycles now in the crypto market. And each time the price of Bitcoin and the adoption of Bitcoin and the adoption of companies in and around the environment just keep growing and compounding out. So pretty soon the returns in the space are probably going to match the returns of the general US stock market, like 10% a year. Currently, they're about 83% CAGR, right? Compounded annualized growth rate. Bitcoin's roughly 83% CAGR a year. I foresee the Bitcoin CAGR diminishing to right around S&P 500 average annualized returns. I think you'll probably still have maybe 2 or 3 decades of maybe 50, maybe 25 to 50% annualized returns, and then it's going to tail off to maybe about 10%. And once that happens, that's when every single person in the United States, their financial advisor will be allocating, probably 5% of their portfolio to this space, right? Not to ramble on too much, but one of my good friends, Dan Tapiero, he was the founder of 10T Holdings, which he actually renamed to 50T Holdings. And if you don't know who Dan Tapiero is, he got his start on Wall Street working under Stan Druckenmiller. And Stan Druckenmiller got his start on Wall Street working under George Soros, right? One of the greatest traders of all time. And, his kind of thesis on this is the same. Back in 2015, I remember him saying, this is going to be a $10 trillion industry. Now we think it's going to be a $50 trillion industry. I think within my lifetime, this entire space will probably be worth maybe 100 trillion by the time I'm 90, 100. Please God, I live that long. So to kind of take it all the way back to what Andrew was saying about Robinhood, if you remember, a few years ago, I was very against Robinhood, right? I didn't like it. I thought, they're kind of not giving the right impression on investing. They're making it kind of like a gambling, anonymous aholics kind of platform. But I was kind of being a little bit of a hypocrite, right? Because I always say kind of lean into the innovation, kind of, pay attention to that next generation. And the next generation of investors, right, is not calling up their broker or is not on Interactive Brokers, in all this terrible user interface. It's very simple, easy, dumbed down interface, right? It's the same thing that happened with the iPhone, right? The iPhone was such a change from the BlackBerry because the UI was just so clean and so easy, right? That's why, there's like that running joke about, anyone who has an Android is like really, really smart. Like if anybody's ever seen those memes about having a high IQ, it's like if you ever see someone with an extremely high IQ, yeah, they definitely have an Android. So money doesn't lie And Robinhood is taking in a lot of net new customers, and they're building for the future. They're building a platform to trade and invest in cryptocurrencies when a lot of the other broker dealers are kind of resistant to it. So it's kind of like, skate to where the puck is going, study history, buy that book, Charles Schwab's, life story, and it's very similar to what's happening now with Robinhood. Very, very similar. Charles Schwab and Robinhood. Laced Mushroom says it's easy to be negative sometimes. For every winner, there's been 20 Enrons, probably more. Probably more. Hey, Trade Brigade, what's going on? Yeah, we're back. We're finally back after about a month-long hiatus. I was sick for about a month, dealing with some crazy stuff, and then we were changing firms. Corcoran offered us a pretty significant package to come over, so we were kind of dealing with that. But yeah, if anybody is not familiar with Trade Brigade, he does a really, really good markets live stream in the morning, pre-market. I'm in there from time to time. I have it up in the office, so go ahead and check him out. Also, very good follow on the X platform. So if you're following me on X at Walks Wall Street, also a very good follow is Trade Brigade in the audience. Check him out. Krog Dog says Mark Cuban says he's in the red when factoring in all the Shark Tank deals. Yeah, I mean, Shark Tank's a good show, but the companies there, it's more like you're not seeing unicorns go through Shark Tank, right? Like the next Facebook or the next Uber is not going through Shark Tank. These are more like kind of mom and pop-ish companies, consumer goods companies, not really like tech unicorns. But I definitely get what you're saying for sure. Edwin says, loved your Miami streams last week. I want to rent a condo on South or Mid Beach. Any suggestions? I would say it depends on what you want. If you want a lot of action, so to speak, and you want to be in the middle of everything, I would say South Beach. But if you have the budget for it, maybe do the South of Fifth neighborhood. So, and I would suggest maybe one of those condos overlooking South Point Park. Alex411 says you can't make all those deals and expect most of them to make money. For sure, 100%. Rick says Poppy just sold for over $1 billion. They were on Shark Tank. Yeah, like again, it won't be like a unicorn, but yeah, I mean it's a lot. I'm just kind of making the point where it's like you're not going to see, a Facebook pass through there. You're not going to see like a next Amazon or something like that, or an OpenAI is not going to go on Shark Tank. Shark Tank's a great show. I love that show. Ben, did you see where you could take out loans against Bitcoin? Yeah, you could collateralize it, and I think that's going to be a massive part of a lot of banking businesses. Now that SOB 121 is gone, and I wrote about this in the newsletter about a half a year ago, you're going to start to see a lot of pure play investment banks getting involved in these businesses. And same thing, with stocks. If you don't want to sell your stock portfolio, well, you could post it as collateral and take out loans against your portfolio so you don't have to have a taxable event, right? Be able to do the same thing with Bitcoin. right? Maybe we should head back uptown. Anyway, if you guys are enjoying the stream tonight, feel free to leave a like on the video. Subscribe if you're new. Oh, we forgot to talk about Meta. Meta reported an amazing quarter that blew away expectations, and I think the stock's up, what, 5% after hours? Now, with this gap up on Meta, does this take us above the 200-day? I have to look. I don't think so. Maybe just a hair under. But that's going to be when this market really gets in gear. Is when you have Meta, Amazon, Apple, really the Magnificent Seven. When all those are trading back above the 200, you know, that's when it's really game on here. Maybe somebody could quickly look that up. With Meta gapping up on earnings, does that take us back above the 200-day? Trade Brigades is Meta CapEx announcement 2. Gap right to the 200-day moving average. So are we above it now, or are we still below it, right at the 200? But yeah, really good action. I mean, Trade Brigade, one of the things we were talking about today, earlier in the stream is, well, the big theme was, I think we should totally disregard the tariff news, because all of the tariff news is fake, right? On both sides, right? They say, you know, the US is in talks with China. China comes back and says they're not. I think the tariff news is totally priced out of the market. I think it's time to put that book away and just watch price. We now have 2 follow-through days. You know, the leaders are already out. Netflix is up and out. Spotify, Palantir is looking great. We've actually had 2 follow-through days. And it's possible that this market may have a similar lockout rally like we had when the NASDAQ followed the 21-day moving average all the way up coming out of COVID. But the most important telling thing to me, the biggest inflection point aside from those 2 follow-through days, was actually Tesla's reaction to earnings. And I know I've said this a million times. I don't think people realize how important that was, right? Because Tesla reported, you know, piss poor earnings, and the stock gapped up, and it ran for 2 days. I think the risk to Tesla is the upside, and it set a precedent for the market that the reaction to earnings by and large should be positive. So I think people should be looking this earnings season to the reaction that a lot of these stocks have to earnings. And if you start having these stocks gap up on terrible earnings and also continue to go up on great earnings, that is a major change in the market. So we may run into a situation, which usually happens at a major turning point in the market, where you're just going to get crushed every day with tariff news. You know, every day it's going to be some, you know, calamity about how, you know, we're not going to be able to buy bread at the store because of the tariffs. Or, you know, how many of you have read this? You know, shipping containers. There's no shipping containers coming to the United States from China. You know, the shelves are going to be bare. And they had, you know, the Einstein of Wall Street, that Peter Tolchman. He's a good guy, but they had him on CNN, you know, scaring the shit out of everybody. And it may be true, but that's the stuff that you see at the bottom. So the tell is you have this rally, right? You have this rally off the bottom that is in stark contrast to the news. So I think for the next month and a half, you're not going to see anything remotely positive regarding the economic front, right? We just got a negative GDP print. That is going to be lambasted everywhere in perpetuity. It's going to be in your face. It's going to be front lines of CNN. It's going to be, you know, sell your dog, right? Sell your dog, sell your cat, do whatever you can to hunker down, all while this market's going to springboard back in your face, potentially, and you got to participate in that, or you got to see through that negativity, which was exactly the same thing that happened in 2022. Right, in 2022, you turn on, Fox News or the 5, and every day is lambasting Biden and Kamala Harris about how, Joe Biden is crashing the economy because he can't talk, and this, and Kamala Harris, is the AI czar, and she doesn't know anything about AI, and the market's losing confidence, and money's going to go overseas, and blah, 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 all the bullshit, right? All while you started to see financials lead, a lot of the investment banks, the boutique investment banks leading, and then we had a massive bull market, one of the strongest bull markets I've ever traded through. Now, again, this isn't 100% lock, but you got to kind of let the market pull you in. You got to participate, and if the market goes the other way, you got to be able to lose some money. You got to be able to blow those positions out, at the 7 to 10% loss. But now that we've had these 2 follow-through days, now that we're in the thick of earnings season, it's going to be very critical to watch reaction to earnings. The Standing Bear, thank you so much for your very generous $10 donation. It says, good evening, what are your thoughts on the Ondo crypto? They seem they are the next tokenizer of stocks. The Standing Bear, I have no idea what that is, but I'm going to do some research on it and I will let you know. But thank you very much for your generous donation. But in full honesty, I have never heard of it. I've honestly never heard of it. But I'm going to take a screenshot of this, and on the train tonight, I will review and I will get back to you. So the Standing Bear, once again, thank you for your very generous donation, and I appreciate it. Brad's Brain says, I was honestly surprised to see Hood guide for growth in this market. Thoughts on that? I think it kind of makes sense. Now, what's interesting about that, hold on, because I have 2 thoughts in my head at once. It's easy, right, in this market, let's say if you're a CEO of any company, right, and maybe there are some CEOs in the audience. If you're a CEO of a publicly traded company, the easiest thing to do right now is to pull guidance, and you probably won't get punished, right? Because the market would understand that, right? There's tariff this, tariff that. If you want to take the easy road as a CEO right now, you could just rip your guidance and, just say, due to, uncertainty, blah, 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 we're going to pull our guidance. So I think companies that stand by their guidance and say, hey, look, we have a job to do and we're going to navigate this environment. It may be tough, we may miss, but we're going to, hold firm. I think those are the companies that are going to get rewarded. But I think if you pull guidance, you may not necessarily be dinged unless you're Intel and you're a terrible company. Trade Brigades, Dan Ives had a good bit on CNBC post earnings about this. Send it to me if you don't mind, because I believe Dan Ives was the analyst that was on that CNN, the most cartoonishly ridiculous CNN segment I've ever seen. And I mean, that's saying something, right? Because there's a lot of cartoon shows there. Was with Dan Ives and that Peter Tolchman. And there was, what's it called? The CNN anchor had a whiteboard, and she was drawing, literally a whiteboard with like a dry erase marker, and she was like drawing container ships. She's like, I'm just gonna draw a Chinese container ship right now, and then I'm gonna put an X through it, because that means there's gonna be no Chinese container ships, and you're not gonna have any food, America. So this store shelf is gonna be empty. And then they're like, yeah, I was talking to a bunch of CEOs and they're saying the same thing. And look, they may be right, okay? I want to make this clear distinction. It's not a matter of fact if they're going to be right or not, okay? That's the distinction. It's the distinction that it's on prime time. When's the last time you saw Peter Tolchman or Dan Ives on a primetime CNN political news show talking about the stock market? Pretty much never, right? It's kind of like Kramer going on those, CNN and Fox News at the 2008 financial crisis, like scaring the shit out of people, right? The Standing Bear, thank you so much for your $5 donations. As Ondo is backed by BlackRock, I will check it out. Thank you very much. I'm going to take a screenshot of that. So Ondo, BlackRock, I feel like I should have heard of it. I mean, is it just an investment that BlackRock made, or is it part of their Aladdin platform or something? But thank you very much. I will check that out.
Like healthy and honest.
Fun faces. I think Kramer was also on CNN talking about the tariffs. And again, I just want to make that distinction because I know my email box is lighting up as we speak. They may be right. I don't think they're going to be right. By the way, that's my personal political opinion, but they may be right. Okay, maybe these tariffs just totally backfire and it's Armageddon, right? The fact of the matter is it doesn't matter, right? In terms of a market standpoint, you don't see this type of talk and this type of narrative with these finance guys on primetime CNN at any other point in history. It's like this is stuff we're going to look back on in 10 years and be like, yeah, that was definitely at least close to some sort of intermediate term bottom. Right. Another example that I retweeted on X, the night that the market was literally almost hitting circuit breakers to the downside, Bill Ackman came on X, went on this ridiculous diatribe, and look, maybe he's right, I don't know, but the fact that he was just lambasting Howard Lutnick about how there's some conspiracy that Howard Lutnick wants to, crash the stock market so cash could flood into the bond market or what, something like that, because Cantor has a big bond business and he thinks that he became Commerce Secretary so Cantor Fitzgerald can make a bunch of money trading bonds, and he has a conflict of interest, and the world's going to end. And I retweeted that tweet, and so far, I think that Ackman tweet literally bottom ticked the market on futures. So again, the market could make new lows, anything's possible, but so far his tweet at least ticked the intermediate term low. Brad's Brains is from a business perspective. I could tell you we are adding a tariff charge to all bids, and no quote is good for more than 30 days. It's volatile. It's definitely making life harder for deal makers, for sure. I'm not sure if you guys saw this, but that website Temu, where they sell all those like Chinese goods products and stuff, if you go to buy something on there now, it shows the tariff charge clearly on there. So if you buy something, let's say for $50, the tariff charge is almost like exactly the same amount as the goods, which is crazy. Also, as it relates to that, there was some news that Amazon was going to put the amount of the tariffs at checkout, so you could see how much you're paying essentially for the tariffs. It's like a pass-through. I don't know if this was fake news or not. I mean, there's so much fake news, but apparently the Trump administration placed a call to Jeff Bezos telling him essentially don't do that and take it down. I'm kind of leaning towards that's fake, mainly because Jeff Bezos isn't the CEO of Amazon, and it's Andy Jassy who is the CEO of Amazon. So this story seems a little bit too on the nose, right? Because the average American, right, who doesn't follow the markets all the time, when they think Amazon, they think Jeff Bezos. Would everybody agree with that? I think if you went up to the average American on the street and say, if I say Amazon, what's the first name that pops into your mind? Everybody's going to say Jeff Bezos. Nobody's going to say Andy Jassy, right? So to have the Wall Street Journal headline saying Donald Trump called Jeff Bezos to, air his grievances with this seems a little fake, but it may not be fake. But why wouldn't you call the CEO of the company? So I don't know if the story's fake or not, but apparently Amazon is no longer going to show the tariffs on the bill. Maybe they still will, who knows? Andrew O'Donovan says, I'm interested in this Friday's job numbers and what the hell is up with NVIDIA. You know what I think would be the most bullish scenario for the jobs numbers? I think the most bullish situation is if the jobs numbers absolutely miss the mark by like a monumental number and the market gets a bid higher after hours. I think that would be even more bullish than it probably bull market confirmed 100%. Top Cat says, any thoughts on Carney, Tom? He was Bank of England governor here for a while. Yeah, I'm very familiar with him, actually. He is one of the best modern day bankers. I believe he got his start at Goldman Sachs. So he was a major deal maker at Goldman Sachs. The guy's a business guy. He knows how to get deals done. And I have an interesting take. I wanted to save my thoughts on him for another stream, but I think it's more positive than you would expect. There's a lot of people that are saying that since he's of the Liberal Party, this is going to spell really bad news, because essentially all of his messaging has been, we need a leader that's going to stand up to Trump. We need to sign our own trade deals with major countries in Europe. And if I think he said something verbatim that if the United States doesn't want to lead, Canada will take that place and lead. But I think he said all that really to get elected. And I think he's going to have a very good relationship with the United States, particularly Scott Bessent. Because if you look at many of the people who are in the Trump administration, it's pretty much like a boys and girls club of Wall Street finance. So having the PM of Canada, whether you like the guy or not, be an investment banker, I think there's going to be some alignment there. That's my take. Hey, what's up, Alex411? Let's cross back over to the right. Emma Montana says, hope you are right on that. I mean, look, I think anybody's better than Justin Trudeau. So, look, I mean, I like Canada a lot, and I think that here's where I will criticize openly the Trump administration. I don't really like to get too political, but I think Trump really went too publicly hard at Canada. Right? I think if he just had done all the same exact activity with the tariffs without any of his rhetoric, you would be in a very different situation. But when you get on, Truth Social and just like lambaste people, that really does a disservice. I strongly believe that if Trump put all of these tariffs, blanket tariffs, even on our allies, on everybody, right? Without the turbocharged rhetoric about, Governor Trudeau, 51st state, blah, 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 blah. That's very alienating. That's very isolating, even to a conservative Canadian, right? Because, I'm an American. I want America first. I love my country. But there's a lot of Canadians that are the same way. They love Canada. They don't, they don't appreciate, saying Trump is kind of like condescending and talking down to Canada, saying that they're going to be the 51st state. You could do without that lambasting. So I kind of think that they really dug themselves a little bit of a hole there. Brad's Brain says, Tom, I really enjoyed the Besant videos you sent me. I'd be sure to include it in the next newsletter for folks. I definitely will. Thank you, Brad. Appreciate it. Sabrina Fair, good to see you. Thanks for joining. Hope you're doing well. We're going to navigate back to 57th Street. Hey, Andy, what's up? Annyeonghaseyo. Trust everything is going well in Korea. I should be in Korea a little bit later this summer, if not the first week of September. So I will be back in Seoul. One of my buddies texted me the other day. Apparently there was a massive fire at the World Trade Center right in Seoul. So hopefully that didn't cause too much damage. That was right at the COEX Center. I'm not sure if you saw that, but a big fire broke out at the COEX Center. Hey, Mohammed, thanks so much for joining. Appreciate it. This is now West 40th Street and Broadway. You have a massive line for Joe's. Susie says, Tom, if you had 5 to 10 grand, what would you do? What's your opinion on credit unions? I can't advise on what you should do on how to invest 10 grand. Mainly because it's legalese. I'm not licensed advisor. I can't give out any type of advice. But what I will say is, if you're trying to take 10 grand and turn it into a lot of money, I would say use that 10 grand to acquire a skill that'll buy you or earn you a very high income, right? Because you kind of need a big shovel. Most people need a big shovel. And I think some people, they're like, I'm going to save $10,000 and then I'm going to try to trade, $10,000 into millions of dollars and I'm going to work from home or whatever. That's very hard to do, if not near impossible. And I don't think it's worth your time. What I do think is worth your time is finding a career that is very lucrative, where you can make lots of money, like hundreds of thousands of dollars a year, if not millions of dollars a year, and then invest that money into very big concentrated bets, like you could throw down, right? So don't put the mental focus and don't waste your mental capacity on, fumbling around with 10 grand. Throw all of your mental capacity into figuring out what you're good at. Find a skill, find a high-paying career, start a business or something, right? Where you can make a lot of money, and then you could invest a big amount of money, right? There's a lot of jobs out there, a lot of companies that are hiring, where you could make, $250,000 a year, $300,000 a year as you move up the ladder. And then maybe you start your own company, and maybe you're making a few $100,000, working for yourself. But the focus shouldn't be on, how could I protect this $10,000? How could I save this $10,000 in a credit union? And I want to find the best credit union. Think bigger than that. I mean, this economy is massive. So figure out what you're good at. Do some research on what are the most lucrative careers in the economy, and go pursue those. Learn a skill, right? And then once you've worked there for a little bit, you've learned that skill, you're making a lot of money. Well, then maybe you want to start your own thing, and you'll have the money to fund it, right? And when you're at that job, you're making a lot of connections. So that's what I would say. All right, we're back at Salesforce Tower. Hey, Noodles, what's going on? I wasn't expecting a stream tonight. Yeah, hopefully we'll be back to our regular schedule. Hopefully. We'll see. Hey, Hal T16, good to see you. Welcome. Scott Solomon says, Tom, so glad to have you back. Thank you, Scott. It's good to be back. Appreciate it, just in time for the summer. You can even see the leaves coming in nicely on this Bryant Park. Now, Meta reported earnings today. How much was their net income? By the way, I just kind of want to make a point because, advertisers are still spending a lot of money. Meta really blew out their earnings report. So, another thing about the media that I would say is don't let this, news get you down. And get you very depressed, because according to the data, consumers have never been more negative on the economy, almost ever, right? Everybody has a very pessimistic and negative outlook on the world right now and on the economy, and that is going to do you no good, right? Put markets to the side for a minute. Consumer sentiment is down. The University of Michigan consumer sentiment report, punching through all-time lows. And I think a major part of that, right, that's exacerbated to the upside and is exacerbated to the downside is really the news flow. And it's really hammering a lot of people. When you turn on CNN and Fox News, for the 4 years of the Biden administration, and you see just like, you just inundate yourself with the fear porn, you become paralyzed. You just become so paralyzed. And I don't think I've ever seen more negative news flow than what you see right now. Like, if you're a consumer of the news, Fox News and CNN right now, I don't even know how you would get out of bed. I don't know how you find the energy to actually get out of bed and go to work. So if you turn off the news and have a positive outlook on life, there's massive opportunity out there, right? Clark's Meta reported a net income of $16 billion for the first quarter. Huh. I mean, think about that for a second. In 3 months, for the first 3 months, they made $16 billion. In 3 months, okay? So, somebody has to be spending money. Somebody has to be doing good. The money's out there, right? And it's not to kind of give a hype up speech because it's backed up by data, but there's a lot of people that are very, very negative right now. And I think that's going to be another thing that really fuels this next bull market. So, I don't know. That's really the only piece of advice I could say. I think the tariff news is now irrelevant, so don't pay attention to it. Don't let it suck your mental capital, especially going into the summer, right? We're going into the summer. The weather's going to be nice out. You know, I'm not going to let the fear porn keep me in bed all summer, right? Black Valley says, Tom, 50% of America can't afford to pay a $1,000 emergency expense. Is this people living beyond their means? You know, I've contemplated that statistic. Well, the two things, right? One, it's been a very bifurcated economy. We've had a very hollowed out middle class. You know, obviously the Federal Reserve has really exacerbated that because the vast majority of people who own assets tend to be rich, right? I think the top 10% of Americans own like 90% of all of the assets. But I'm actually not so sure that particular stat is correct. We're almost on we're over the 2 hour mark, but I actually was digging through some data that would actually combat that. So all of these stats that you see about how everybody's like impoverished and so poor, I actually don't think that those stats are correct. I wouldn't put it as high as 50%. And I have the data to back it up, but we're at 2 hours and my phone's gonna die. But we will come back to that, and maybe I'll even write a piece, an article about it, and I'll publish it. But there is truth to the fact that we're pretty much and especially in major cities, right? Cities like New York. New York City is a total two-tier society, totally is. Your quality of life will only be good in New York City, you know, to the extent on, you know, if you want to have kids and, you know, live in some sort of dignity, if you make some good money here, right? It's very hard to raise, you know, 2-3 kids, you want to live in Manhattan, and, you know, you're not making like a significant amount of money. So I think major cities, your quality of life is going to differ drastically based on the amount of wealth you have. All right, we're now walking northbound, West 48th Street and Avenue of the Americas. Hey, what's up, Todd? Good to see you. Thanks for joining. It's good to be back. Alan, good to see you too. Mohammed. We'll quickly go through the schedule and then we'll wrap up the stream here in a few moments. So we're going to try to get back on normal schedule in terms of the live streams. So we'll probably be on every night starting at 8:45. However, we may take off Wednesdays, maybe. I have to see. We will still upload our regular 4K standalone videos, maybe 4:30ish, maybe 5 p.m. Those are non-finance related, you know, walking different neighborhoods in Manhattan, Brooklyn, Queens, Bronx. We have a lot of borough neighborhood tours coming. Just because I enjoy making that type of content and showing everybody different parts of the city, also Miami. So we will do that as well. And those will be posted every day. But by and large, we should be back to normal schedule where we stream every day at 8:45. Hopefully, please God. Hey, Western Mass Dave, what's going on? Always a pleasure to see you. Welcome back to the big city. And it's finally good weather out, so definitely in a good mood. Wow, it's almost 11 p.m. I gotta go back to the office anyway, so maybe I'll just take you guys along for the ride. You can see the new office. I'm in the IBM building now, so we'll see. We'll just let the, maybe we'll cross this way to get away from the music. Yeah, so the new office is pretty cool. We're connected to the Trump Tower via the atrium. So if anybody's ever been in the Trump Tower on 5th Avenue, if you walk all the way to the back, there's this really nice atrium where there's like a coffee shop in there. There's like a small cafe. And then I am right off to the left in the IBM building, which I think that building was recently just sold. So IBM doesn't own it anymore. And I only think IBM has one floor of offices. I think the vast majority of it is like broker dealers, financial services, hedge funds, and then Corcoran, and I think Berkshire Hathaway. Hey, David Armstrong, good to see you. Check out 270 Park. That's coming along really nice. Darren, this would be my perfect office. I think it'd be pretty cool to work in the Empire State Building. Just like once in your life, be able to commute to work and go into the Empire. I think that'd be pretty cool. MJK is currently in Korea. What's up? What time is it in Korea? Like noon? 12:15? Something like that? Bang this right on 5th Avenue. Hey, Julian, what's up? Very happy to be back. It's noon in Seoul. Yeah, I'll be in, I'm going to be traveling to Seoul, and then I'm going to be going to Singapore, finally. I was supposed to go to Singapore last time, but I wasn't able to. But this time it looks like it's a go, which I'm really excited about. That's probably maybe number 1 or number 2 places I want to go in the world. Singapore, for sure. Hey, what's up, Kevin? Good to see you. Man, the city looks beautiful tonight. It's finally not freezing. It's like enjoyable walking around. You could tell a lot of people are outside too at 11 at night. It is a tad bit windy though. Now this Rolex building is coming along fantastic. Maybe tomorrow night we'll have to go by 525th Avenue. I think that's my new favorite building in the city in terms of new development. 525th. Here we have St. Thomas Church. Hey, Nicole says, hey Tom, going to Times Square next week for the first time in years. Anything there that you recommend? Actually, yes. Actually, 100% yes. So they just opened a new Carmine's in Times Square. So if you're visiting with maybe your family, I would say if you're visiting with 3 or more people, go to Carmine's in Times Square. It's a brand new dining room and it's a great place to eat. But I don't know, if you're traveling alone, maybe don't go there because the portion sizes are ridiculous. It's massive. But if you're traveling with your family, I would 100% go to Carmine's. Check it out. I think that's their newest location. Here's the University Club. Look at how nice it looks in there. This is the Peninsula Hotel. Hey, what's up, Adrian? Well, if you guys enjoyed the stream tonight, feel free to leave a like on the video and click the subscribe button if you're new. Once again, we will be live every night, hopefully, around 8:45. Also, if you want to join us around 4 p.m., maybe 5 p.m. Eastern Time every day, we'll upload a walking tour around the city or Miami. That'll be our 4K walking tours. They will be posted earlier in the day, so check them out if you'd like. They'll be under the videos tab on the channel as opposed to the streams. It was Trump Tower. So I usually walk right through those doors and out the back, and that's how I get to the office. All right, everybody, we'll call it a day. If you enjoyed the stream, feel free to leave a like on the video, subscribe if you're new, and we will see you all right back here tomorrow at 8:45 p.m. Thanks so much for watching. Western Mass Dave, appreciate it. I'm gonna go right through here. Scott, thank you very much. Darren, Bobby B, Dale, Adrian, Sue Rollins, Mohammed, Paul, Joseph Hardaway, Brian, Amy T, appreciate it. Austin City Limits, all of our moderators. See you guys back here tomorrow night. Take care.